All right, so maybe your investing skills are lacking just a little bit, and also you don't have a lot of money, but you want to get started investing. So what's the best way to go about doing that? I have a really simple way for you to get started with investing. It only takes one type of fund and one app, so let's get started. Hey, what's up guys? It's Justine with Debt Free Millennials, the channel to help you crush your debt and live payment free. Now, when I was asking you guys what type of content you'd like to see on the channel, a lot of you guys had said you wanted to learn more about investing and just how to get started. So the app that I'm going to be profiling today is Robinhood. You've heard of Robinhood. If you have seen Robinhood lately in the news this past year, let's just cut through all the BS and just look at the platform for what it is, which allows the layman investor, the average Joe investor, to actually access the stock market very easily, buy and sell various stocks and bonds on the stock market, and you can do it for literally very little cost. Keep in mind, I am not a financial advisor. I want to explain that up front, that I am not a CFP, a financial advisor, but please use this video as educational purposes only to help you make the best decision for your investment strategy. Now, the fund that I really like to use and what I really started utilizing when I was starting my investment journey were index funds. So what are index funds? Investopedia.com describes an index fund as a type of mutual fund or exchange-traded fund, an ETF, with a portfolio constructed to match or track the components of a financial market index, such as the Standard & Poor's 500 index. An index mutual fund is said to provide broad market exposure, low operating expenses, and low portfolio turnover. These funds follow their benchmark index regardless of the state of the markets. So think about all of the different companies that might be on a particular index, like the S&P 500. All of those companies and their stock collectively form into one group, which is composed of an index fund. So that one index fund is going to hold stock in all of those companies represented on that particular index, and then it tracks the performance of the index over time, which means you are getting that broad exposure, and because it's tracking the performance of all these companies, they're not actively managed. So they are passively managed, which means that your expenses associated with that index fund are going to be extremely low. So those are the biggest benefits of buying index funds, is that they are passively managed. They have low operating expenses. You get a lot of diversification in one fund, meaning you don't have to go cherry pick these different stocks and bonds and trying to figure out how to diversify your portfolio. It's already done for you within one fund. It's also a really ideal type of situation for those who like to buy and hold. If you are a buy and hold investor, much like I am, you basically buy the index fund and you let it ride for the next 15, 20, 30, 40 years and really let that account balloon over time. So index funds are a really great way to start investing, but there are some cons. Just because you buy an index fund doesn't mean that you aren't subject to market risk. There's still a chance that you could lose money, especially with market swings like we've seen in the past. You also can't pick and choose like you can with individual stocks, and there's no human element involved. But I kind of like to think that the lack of somebody managing the index fund is actually a good thing, because you don't have any of those associated expenses with the index fund like you would with more actively managed mutual funds. Okay, so there's a lot of different index funds out there, but which one is right for you? There's investing companies like Fidelity, State Street, TD Ameritrade. They all have their own index funds, but I personally like using Vanguard. Vanguard has a Vanguard Total Stock Market Index Fund. The ticker symbol is VTSAX, and you can buy that as a mutual fund index fund, or you can buy it as an ETF. All right, so let's cover the main differences between the ETF version and the mutual fund version of these index funds. The first thing is with ETFs, you can buy one share at a time, whereas the mutual fund version is you buy in at an initial investment of $3,000. Now, most of us don't have a minimum investment of $3,000 to put into an index fund, and that's where Robinhood comes in, because then you can utilize Robinhood to buy the ETF version. So the ETF version, you have more control over the price you pay per ETF, whereas the mutual fund, the price you pay is calculated at the end of the trading day. All right, so the minimum initial investment for those mutual funds, the VTSAX, you can purchase that directly on Vanguard.com. But for everybody else, we're going to hop over to Robinhood because we're utilizing this strategy with little money, and we're going to use an app that makes it very easy to access these index funds. So let's go ahead and log into my Robinhood account, and I'll scroll down to the stocks that I already have. So I already have some VTI shares that I purchased in the past. So you can see I have 6.37 shares. Now the 0.37 just means that if you don't have enough money to buy a whole share of VTI, of this particular index fund, you can actually just buy a portion of it. So shares are currently at $226 per share. If you don't have that amount of money, and let's say you only have $50, you can buy $50 worth of VTI using Robinhood. So you can click on the VTI symbol, or you can actually search for it, VTI, and there it is. And then you can click trade and buy. So you can actually do one share, you can do half a share, which would be $113, and then you can click review and then swipe up to submit. But I'm going to go ahead and edit this and buy another share. Review, swipe up to submit, and order received. So you can see on the app exactly how this particular index fund has been performing throughout the past 5 years, 1 year, 3 months. And it's really cool to see because it's just going to continue on this upward trend. And so I don't think with index funds that you can really time the market. If you're a buy and hold investor, you're going to be consistently making investments into these types of index funds. And I think that's where Robinhood can make it really easy for you to access these index funds with very little money. Also, another feature of Robinhood that I really like in terms of accessing these index funds and getting started with investing is you can set up reoccurring investments. So if you click over to your profile and you scroll down to recurring investments, you can view and then create. And then you can search for the different stocks or ETFs. So Vanguard is listed up front. And then you can choose the frequency. Every day, every week, every 2 weeks, or every month. So let's say you wanted to do it every month. Continue. And then you can choose your payment method, whether it's coming out of your checking account or your Robinhood buying power. And then you can specify the amount of money that you want going into this account. So let's say you want to start small and it's just $25 every month. Review, swipe up to submit, and done. So every month, your order to buy $25 of VTI every month on the 29th is scheduled. The first order will take place tomorrow. That makes it really easy to continue investing in index funds, which we know has broad exposure to the stock market, very little operating expenses, and it takes very little money to get started, especially if you're using an app like Robinhood. So again, I'm not a financial advisor. You have to do what works best for you. I find that utilizing something like Robinhood and index funds makes my investing strategy very simple and something that I don't have to consistently worry about. If you want to try Robinhood and get your first stock free, you can click the link below to sign up and let me know if you've tried index funds as your first investing strategy. and I'll catch you in the next video.